So I think Paul Samuelson had one of the best quotes. Economics, it's not exact science. There's more art to it than one would expect.
Does Governor Myron know that?
I think every economist knows that. Any economist who does not admit that is simply lying, because we know that things are uncertain. Neoclassical economists assume perfect rational markets.
Right.
We know that's not true. We know behavioral economics, irrational markets. Those are all really what's driving, to me, modern economic thought of this century. And so there's so much art into it, which is, to me,
right.
You don't want to bet the house on something that's such so subjective.
Win thin with us in 10 minutes. Myron with John Farrow. Looking forward to that conversation. Okay, I'm going to go to the output gap. I resurrected out of conservative Richmond a Herzl paper from years ago, vamping Anthony Orphanides, who was wonderful. And it basically said, would everybody get a dose of humility? Do you detect here a certitude on the part of Trump economics that's way out of line?
Yes, and I think we've seen that time and time again. He's certain that tariffs are great for the nation. He's certain that manufacturing will onshore.
4 rate cuts will solve everything.
Yes. So, to me, as the biggest thing about being an economist is to really be humble and realize that the world is very complicated. Many of these observations that, for instance, Myron and others make, it's in a very partial equilibrium world. Say, okay, we're going to make this policy and it's going to fix this. But what I believe that they don't take into account of is the really general equilibrium portion of it. Like, what are the secondary and tertiary impact of these policies within a general equilibrium framework? And that is what I think is missing in a lot of the policymakers in this administration. Again, it's very humbling.
So what is your view of this U.S. economy here? I mean, a lot of folks will say, hey, we're still in good shape. Don't worry about it. But other people say, boy, if you look underneath, whether it's the labor economy, you see some areas of weakness. What's your view here?
Yeah, so Paul, that's literally the million-dollar question right now is, what's really going on with the U.S. economy? Because out of that, you can draw, well, what's the Fed going to do? So face it, we started this year and very strong. We came in at almost 3% last year. Momentum was strong. All of a sudden, we got hit with deflationary sort of impulses. Now remember, this is the difference between Trump 1.0 and 2.0. Back in Trump 1.0, he put in the inflationary sort of stimulus first. Tax cuts, deregulation, and immigration next. And we got hit with a dose of sort of deflationary stuff right off the bat. So we are losing momentum. There's no doubt the job market, the labor market is cracking. I think it's going to hit us more than we've seen in the next few months. We've had delay, because of the sort of all the delays with tariffs. The companies didn't pass on the tariffs. The companies didn't make adjustments. And now we're going to see that, I think, coming in force in the next couple of months. Commercial
free for Global Wall Street. Win thin of the Bank of Nassau into Governor Myron. Jonathan Farrow speaking to Stephen Myron here in about 8 minutes. Paul Sweeney?
So when tariffs, that was, for the first 6 months of the year, that's all we talked about.
That's not the Taylor rule.
Yeah, that is not the Taylor rule. It's kind of gone to the back burner here. We've got equity markets setting new all-time highs every day. Yes, the dollar's still low. It has not recovered. But where are we with tariffs? Is it, in fact, a drag on this economy? Is it, in fact, inflationary?
Yeah, so I mentioned this before. The delay is what I think is key. Remember, I think we saw some of the earnings reports. A lot of the companies were eating the tariffs because saying, we don't know where they're going to end up going. We got certainty in August. And I think all of a sudden you're getting this pass-through. And this is what Chair Powell and some of the other sort of hawks are afraid of, is that, okay, we've got some tariff certainty now, and we're going to start seeing a lot more pass-through. I mean, listen, that's what companies do. They were sort of on pause while the uncertainty was going on. So we should see, the risk that we see higher inflation, that's going to hit real incomes. We're already seeing labor market crack. So again, I think to me the downside, I agree with Chair Powell that the downside risks are sort of the predominant right now, and that's what the Fed is focusing on.